Good afternoon, everyone. This is Trader Tim, eminimine.com, bringing you another market analysis. Today is January 19th, Tuesday, January 19th, 2016. This is going to be a very important week in the markets. As I look ahead to Wednesday, Thursday, Friday, we've got the Consumer Price Index, housing starts, and then Thursday, jobless claims, and then Friday, existing home sales. So a lot of catalysts that can move the markets. On Thursday, I'm going to be doing a live trading session at the Open, and you can find more details on that if you go to eminimine.com, and the top post has the link to join the free webinar. We'll be going through some trade setups, as they happen on Thursday morning at the NYSE Open, and we'll talk about everything that's going on in the markets live. If you like these videos and want to get more of them as soon as they come out, feel free to subscribe to the eMoneyMind YouTube channel. So you can see as we've pulled back on the ES, we've come all the way back down to the large weekly 50% retracement that we moved into last year with targets above us at 2270s. So on the bigger picture, we are still in a potential long setup. That being said, last week we were talking about what will happen if we start breaking these swing lows, specifically the low at 1831 as well as the 1813. Now I'm on a weekly chart. You can see the 1841 is just below us. I think we will come down, touch that, and perhaps breach it a little bit. Maybe dip below the 1830 level, and then maybe get some sort of a bounce. But if we go to the daily chart, an interesting setup that I want to show you is how every time in these last 2 weeks that we've started to get some sort of bullish formation, that is a hammer candle formation, we've kind of opened up in a bullish fashion, and then the bears immediately took us lower, and then the following day we broke down below the initial bullish pattern. And the same thing happened over here on the 11th with the bullish candle, relatively bullish, being as the tail is so long and the bulls were able to push us back up even though we closed lower on the day. Following couple days we were able to make a new high, but then right back down to bears taking over and pushing the markets lower. Same thing a couple days ago. Little bit of a bounce as we near the 1841 level, and then today taking us right back down and looking to possibly break lows tomorrow and touch that 1841, and we'll really be looking closely at this 1831 low and watch what happens at that level. I wanted to walk through some trades from today, or at least walk through the day. I'm going to go to a 15-minute chart, and I'm going to pull up the 24 hours session, and if I come back here from the low, we can see that we were in a nice 15-minute long. We were in a good series of 15-minute shorts, taking us down all the way close to that 1841. We didn't get all the way there, but then we started breaking swing highs with the bounce on yesterday, even though we were, the markets, the broader markets were not trading. After we bounced off of the 15-minute level to take us to the high that we made today, the negative 23% target area, the next 15-minute setup failed down here, and this was in the overnight session. That's why I'm pulling it up. Not going to see it on the trading hours only. If I can remove this one. So we failed the retracement, and then right around the open is when we failed, and we started going into shorts. And so being that the 1841 is below us, I'll just turn on trading hours only again. So you can see that overnight session we made our high, and then as we opened, we started breaking down, and we came into a 15-minute setup right at the 1892 level. And so knowing that the 1841 is below us, and knowing that the last 3 times now that we formed a bearish or a bullish daily candle or a bullish potential formation and started to get some follow through, we were immediately met by bears pushing us lower. So I'm going to go all the way down to the 512 tick chart so we can see this a little bit clearer, and throw a Heikin-Ashi candle on there. And you'll notice, especially now with the 512 tick chart, that the ranges are super big. So there's a lot of profit potential here on the 512 while still being able to use a reasonable stop. You can see right off the open it was just boom, 50% retracement. Boom, another 50% retracement. So giving those first 15 minutes some time for the market to digest, open, and give us some sentiment, if you will. We came down here and formed a low, and we had a couple swing highs back here that we broke. This first one did not make it down all the way to the 50% retracement, so didn't get a fill there. But the next one, so we didn't get a fill from the first high, so I just took that up to the next high. And we have a pullback down here to the 83s, we'll call it, that had a nice little bit of a bounce. And in this case, so if we look at 83s, we talk about a couple different options for trailing your stop. Entering at 83s, putting your stop 6 ticks below, and then once the trade starts to move in our favor, in this case, if you look 83, 84, 85, 86, 87, right here is 4 points before we even broke highs. So rather than using the conservative trail stop approach, where I would leave my stop underneath the entry candle, once we make a new high, pull back and break out, then I would move it from the entry candle up underneath the previous swing low. Since we already have 4 points before we even broke out to a new high, when we did break out, what I did was just start trailing each candle, and in this case, trailing the low candle here, we did get stopped out before the 1890 target got hit, but it was still good for 3 points because the range was just so big here this morning. So being a little bit more aggressive with my trail stop because the market is moving faster and these candles now are much bigger. So that's kind of how I adjust my trail stop method from the conservative to the aggressive, is I look at the ranges of the candles, and I'm not gonna let a 4-point move turn around and go all the way back to break even. I'm more than happy to get stopped out for a reasonable gain in this point. When you're using a 6-tick stop to lock in at 3 points is just fine, risk to reward perspective. So then we came up and eventually hit that next negative 23% target, so we did get a retest. And then we went all the way back up to the 15-minute short on the day. So this would be a trading hours, not trading hours only, but overnight high to low on the morning. And this was the area I was really interested in, because knowing that the 1841 level was below us, knowing that the bulls have not been able to have any momentum past a day or a day and a half, I was really excited to have an opportunity to get a 15-minute short in the same kind of pattern that we've seen the last couple days, and indeed we did get that. Rather than just taking the blind order at 92.50s, I let the swing low break, and then I drew up the first 50% retracement, and you can see this first little bounce didn't quite get all the way up there, so I just pulled the anchor lower again, and then down here, and then we got our bounce right at 90s, and then we did trade up to 91.25s, so we traded in 5 ticks, but not a big deal. With 6-tick stop, and then you can see we got that follow through off of the 512 tick short, broke the swing low, and that was kind of our catalyst to take us lower. And then because the ranges are bigger, I'm not looking to be as conservative with my trail stop. So getting in at a 90, 1890 up here, and then once we broke lows, it's just a matter of trailing each candle's high down here that ended up in 84s. And so, now you have a 90 to 84, a 6 points, and you're still on a very small time frame, the 512 tick chart with a 6-tick stop. So again, another, it doesn't take very many trades to add up to some nice gains if you're just patient and wait for the swing breaks. That's the most important part. If you open up the market, open up your chart in the morning, and you jump right in, and in some cases the very first trade in the first couple minutes of the day may work out, but in other cases you may start getting down towards lows, and you don't want to be shorting down at lows. You want to be in the beginning of the new trend. So at lows, we're looking for a swing break to take a long, and at highs, we're waiting for a swing break to take a short. So, if it's the second retracement in a trend, that's still at the early point of the momentum. But if we're now in the third, fourth, or fifth, and we're down at lows and the market's already made a sizable move, you don't want to be shorting at lows or getting long at highs per se, if you're using a retracement method like this. So that took us into the basically lunchtime session, and then you can see how we started to chop around a little bit, and then kind of move on from there. So if I pull out, you can see we've drifted down, and we haven't quite made it to the 41s yet, so we'll see what we get overnight. I'll clear some of these off, and as we go into the overnight session, we'll see if we can continue to break down and creep down to this 1841. And like I said, Wednesday, Thursday, Friday of this week, we're not very far away, so there's a lot of potential for us to come down at 41s. And when we do, I'll be looking at the 15 minutes that take us down into the 41s, and then look for that 15-minute shorts to break, initiating the 15-minute longs. If we get a bounce and some swing high breaks and we start to make a nice move higher, and once we get that first 15-minute long setup, I'll immediately zoom to the 512 tick chart and take the first setup. And the reason I incorporate the 15-minute and the daily in this context versus just strictly looking at the 512 is because we're at these much bigger levels. This is a 1841 that we've been looking at for months and months and months. So I don't want to just be looking at the 512 down here and taking shorts as we come into a long at 1841s per se. I want to make sure that as we get down to 1841s, maybe we trade through a little bit. Maybe we trade all the way down to the 1831. And if we do trade through that, I would look for a huge spike, meaning, a break of 1831s would give us a major swing low break. A ton of stops would be hit, and then all of a sudden, all those stop orders get hit, and now there's no one else for those people who are essentially either covering positions or getting out of a position. There's no one else on the other side of the trade once all those orders get hit, and then you get this V reversal to the upside. So if we do a day where we break 1831 is a day where you could see a Dow minus 500, and then we start rallying back up and close the day at minus 100, kind of like we saw last week. So those are the situations, and these were kind of mini versions of that when we would break the little bullish formation here, and like last week we saw the big down day in the Dow, and then the next day it was big down day, and then kind of rallied off of that. So a lot of volatility in these situations. So you just want to be aware of where we're at on the bigger picture. So like I said, this Thursday is a live trading session. Just head over to emoneymind.com and you can get all the details for that. If you have questions, feel free to shoot me an email, tim@emoneymind. And if you like the videos, go ahead and subscribe. Thanks a lot, and we'll talk to you soon.